Robert Salomon, how can companies avoid the pitfalls of globalization and develop a global vision?
The main thing is to think carefully about the political, cultural, and economic hurdles that you'll face in every market, and then adapt your business model to those environments.
All right, well, before we talk about the companies that did it right, let's talk about some of the ones that did it wrong, which are some of the great cases in your book. We'll start off with Walmart in China. Got off to a big misstep, didn't they?
Yeah, Walmart entered China in 1996, and they soon discovered that China isn't like one country. It's kind of almost like 9 countries. And so their ability to distribute pan-China on a national basis, they discovered was incredibly challenging. They misread the culture. The customers didn't want the same things in China that they wanted in the United States, and they ran into trouble with local politicians and national politicians along the way. They weren't able to get China profitable, at least according to Walmart, until 2008, a full 12 years after they entered the market, and even to this day, they still struggle to maintain consistent profitability there.
Another case of a company that's done globalization wrong is Uber in Europe. We keep hearing about strikes over there by the taxi drivers. Tell me what's going on with Uber.
Well, Uber, actually the latest headline last week was that Uber is losing now $1 billion, with a B, $1 billion a year in China. But I don't want to focus on China right now. You asked about Europe. And Europe's really interesting because they've been banned from France. They've been banned from some cities in Spain. So Uber's model has been to just enter cities first and worry about the ramifications later. And they took their entire business model from the United States and ported it over wholesale to Europe. That didn't work. They needed, rather than to ask for forgiveness after entering, they should have asked for permission in Europe first.
All right, now let's talk about companies that did it right. So give me some examples, please.
Well, one company that I think does a fairly good job expanding globally is Schein, which is a distributor largely of dental products, but they also do value-added dental services. Schein has been very, very astute in making decisions to go and enter the right markets, to tailor its products appropriately to the cultural, political, and economic realities in those markets that they enter.
All right, and finally, I want to twist it one more time. Can you talk about foreign companies that have come to the United States and avoided the pitfalls of globalization, companies that have done it right here and showed global vision?
Yeah, I think that you can look to the Japanese automobile manufacturers. I think they did a fantastic job entering the United States. They entered on the low end, and they built from there. They learned about American customers. They entered at low-level prices, and then from there they started to move up the market, learning the American consumer along the way.
All right, thanks a lot, Robert Salomon.
Thank you.
Thank you for watching The Street.